Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 22nd of December. So I've seen a very good week of technicals behaving themselves and levels really playing the game this week. So we'll get straight into the markets and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD, and you can see that it did all the things we needed to do this week. It came back down, broke through, like we always talk about, the important 67.20 level, came back down and tested it, and then it launched off it and hit the next resistance zone, which was that 68-cent mark. So it, from a technical standpoint, behaved perfectly. It did all the things that it needed to do. In order to organize a trade inside this, what looks very messy, it's really as simple as going to the smaller time frames. When you see and you know what you're looking for, you've got your basic breaking of the zone. You can see right through here. When it did eventually break through, it came back down and tested it on the 1 hour, and then you are off. So we're always waiting for that test. It doesn't look easy from a daily chart, but the daily chart's really only giving you the basis for the trade. It's the smaller time frames that you're going to get in on. And as you can see, just let me put that up there again. All we're seeing here is this red candle. How did we trade this red candle? We knew it broke through, and we wanted it to retest that 67.20. So that's once it did that, straight to the 1 hour. It broke through, as you can see, peppered it, and then came back down, tested it, and off we go. And straight to the target of 68 cents. Hopefully you were able to catch that move, because that was a very, very solid technical move on the Aussie, and a pretty easy one to get, really, when you look at what we've been talking about over the last little bit. So hopefully you're able to get that. Where to from here is going to be an interesting one. Look, we need to be very, very mindful. This is the last proper week of trading before markets get a little bit volatile and a little bit silly. A lot lower liquidity is going to happen over the next few weeks. So just be really mindful of that when you are trading. And moves can be sometimes exaggerated and on very, very low volume. So just be careful of that, because the snapbacks are very, very sharp. In order for this to break the 68-cent mark, it's going to need a fair bit of force, obviously. I would play this level here the same way we played this level here. It needs to break through, come back and retest it from above. And if it does that and it's got enough power, we get that turnaround candle, then we start to look at 68.80. But we'd play that one in the exact same way that we played this level here. If, of course, it rolls over here and starts to weaken and we start to see a series of lower highs and lower lows on a smaller time frame, then we'd look at getting back down to that 67.20. All scalping at the moment, especially at this time of year, is what I would be doing. All right, over to the US dollar CAD. Sell-off galore. Nothing has changed here, in the sense that really all it's done is basically just sold off. Very, very similar to the obviously the Aussie USD, in the sense that it broke through a very, very important level. This level here at 134.20 is a very, very important level. It broke through, came back and tested it, and then in you go. So very similar to how you would look at it. And yeah, how do you get into that? Really, same deal. You can see it coming down. Okay, it breaks the level, comes back up, tests it, and then starts to make the lower highs and lower lows, and then you continue down with the trend. It's a very, very look, it's been very, very weak. You don't even want to look for long opportunities in a market like this, because it's just so systematically weak that it's barely pulling back. But yeah, that pullback there was a reasonable entry point to get in, because obviously it was a very, very strong level, and when you get a level broken like that, the retest of it is generally a good opportunity to consolidate and get in on that trade. So where this one stops, realistically, the next very strong zone is 132, probably 20 to 30 here, that you can see this red line here. And the last stop is definitely the 130, 115. If we get past that, we're going to have to zoom right out and find a very, very small base for it. It's going to be hard to see it getting all the way down there, in the next few weeks. But look, anything can happen. It's come down here very, very quickly. So we're certainly going to be mindful of it. But we do have support at this level. There was resistance through there, so look out for some sort of support at the 132. If you are shorting, that's the area that you want to be looking at taking maybe a little bit of profit. But if we get another day breakthrough there, then we're on all the way down to 131, sort of 50, and then it's probably a systematic sell-off at that point, and a very, very big correction. So same deal as we play it here, though. If we see a break of this level, we will wait for that particular setup that we saw here, and then join in on the pullback. If we get a reversal at this point, of course, and we see a double bottom or any form of higher high, higher low on a significant time frame, like a 1 hour or a 4 hour, then we start tracking up to what was support, which should become resistance at that point. And you can see little mini moves up into between these horizontal lines. So not bad trading on the CAD, but you've got to be a little bit cautious around these levels. All right, we'll move over to the US dollar yen. Now, this one behaves perfectly as well. It did all the right things for us. It basically bounced off the support level and went all the way up to the recent resistance. We've also got a trend line there that we've drawn in this week. It's not that's significant. It is significant, but the real the importance of this area here, the crossover where the 144.80 is the real zone, because you can see that was pretty much a very, very strong roll reversal zone, very heavy resistance here. When it did break through, very strong support above. So that makes it a roll reversal zone. So the fact that it came back and touched it, launching from here to there was a very easy trade. I know a lot of people got that, which is great because it was a pretty easy one and it was a very easy target. But this is why we don't look at trying to get greedy on one trade, because, it looks like it might be going up with a big force of momentum, but this is systematically selling down every opportunity. So you've really got to be, when you're counter trending, you've got to be very, very sharp on your exits. And that one there was an exit that you needed to get out on because of the heavy resistance above it, and turnaround it did very, very quickly. And again, to get in on that, you look at that and say, well, how the hell would you get on there? But all you need to do is go to a smaller time frame. Like realistically, the point that we're talking about is there. This is a 15-minute chart. Once it got to that level, lower high, lower low, we're in. Okay, and then pull back to the 20 all the way down. Okay, very, very easy to trade. All the things we've been talking about in these videos all year, for the last few years, actually. So hopefully you're able to get some of that. I know a lot of people were very, very happy with this trade because they were able to get in and out in a very, very efficient manner. It was only a few days. It did well. The support is very strong here still at 140, 120. I would probably be looking at that as the next base, but same rules apply for the other move, that if it does close below the 141 area and then retest it from below, then we look for the turnaround from that point and then push on to a lower mark. I wouldn't take the first break, but it has touched it now, and I would be looking at that potential break. If we get a turnaround here and we start to see a high, 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 low sequence and the momentum on the way down starts to increase, it needs to actually break above that trend line and the 20 moving average before we start getting excited about any long opportunities there. So just be mindful of that. All right, US dollar index looks selling off pretty ordinarily, really. Like this has been, it touched the roll reversal zone as well at the 102.60, as you can see, touched it a few days and then started to sell off, resting on basically the bottom, like it's trying to close at a recent low at 101, basically 101.80 there. If this level doesn't hold, it's going to be in a little bit of trouble, I would think, down all the way to the sort of 180 level. There's not a lot there to catch it. So if we do get a daily close below here, the euro is obviously the one we want to be trading. So keep an eye on this one though, because this is the momentum shifter. The euro itself has hit the 110, as you can see. Very strong level. We know this is a very strong level of resistance. Same for the dollar index. I mean, they are obviously inverted. So very strong level of resistance right through here, but it is coming up with a significant amount of force, okay? As you can see. So if we get a close above this one, I would be a little bit more inclined to take it. The way you trade these ones, same deal. You go to the 1 hour charts and you look for pullbacks to a 20 moving average. Okay, we know the resistance is there. We let it come back a bit, catch a 20 moving average on the way up, and that's how we like to get involved in those. I don't like just jumping in on a break of a level, because we want to make sure that the momentum is actually with us and we're getting in at a level where it's actually not going to reverse on us, and we're going to actually go in the direction of the trade that we want. So if it starts to roll over here and we start to see a bit of weakness and we see a series of lower highs and lower lows, say on a 1 hour, then I would be looking at trading it back down to around that 20 moving average or around that 109.20 area, but that would only be scalping and that would be counter trending. Remember, this is looking like it wants to be a long trend. And if we get a close above 110, that is going to confirm the higher high, higher low sequence. So, and if it does that, you would think that the 110.50 would be the logical target from there. And once that's broken, then we look well above. But don't forget, we are going in a very volatile time of year. So, moves can be a little bit exaggerated. So just be really short and sharp with your entries and exits, especially in the next 2 weeks. Let's go to the US 500 now. Look, the US 500 saw a bit of a pullback yesterday, which was certainly due for. It's trying to rally today. You can see we're at the tail end of the session, and it is trying to rally up from its lows. Where this closes this week is going to be interesting. I mean, I don't think we're going to be seeing. Yeah, well, there is one more session to go, so one more proper session before Christmas. Where that really leads us is going to probably dictate what happens next week. Which will be a very volatile week with a lot of public holidays. The recommendation is generally that we trade very, very light. If you have to trade, and you must trade in the period between Christmas and New Year, just keep your trades short and sharp. Don't look for long-term trend setting, because that's not generally going to happen. You're normally going to get very low volume moves and spikes. So just be really conscious of all of those things, because they can whipsaw a lot markets in these environments. So just be really, really careful. But if you must trade and you're practicing, look, this is one of those ones where if we get a close below 146.90, we could look at a bit more weakness down to around that 46 sort of 50 area. But if for some reason it gets above this level, I would be very, very highly cautious of that. The level from where it is now to the top is where I'd be looking at scalping opportunities. Probably use that big red candle there as your base for the next day. If you're looking for shorting opportunities, go to the smaller time frame down to 46.90 to 4700, and if you're looking for long opportunities, go to 4780. Stay probably within that zone, and I think that should keep you out of hopefully harm's way. And a break of either of those levels, I'd be trading with a lot of suspicion and caution over the next little bit. So best to be careful, but there's opportunities inside of that over the next few hours of trading inside that big red candle. Hopefully you're able to catch some of these moves getting up there, though, because that was a very, very good move. Okay, team, thank you very, very much for joining us this year. We've had a lot of fun bringing you these Friday Market Watch videos. On behalf of Pepperstone and FX Evolution, we wish you a very, very Merry Christmas and a Happy New Year. This will be the last Friday wrap video for the year, and we kick on again in the week starting the 2nd of January. So there'll be a couple of weeks break, mainly because of the market, very low volatility. If you are going to trade, good luck, but have a great time with your family and friends, and we look forward to seeing you early in the new year. Thanks very much.